Yeah, I mean, our view, we're still in a seller's market for the semiconductor industry. And the reason for that, you're seeing it with the global shortages. Industry capacity is tight, and we're still seeing pretty good demand, both some things recovering, but also the stay-at-home demand not really fading as fast as expected. So what that means from the pricing, chip companies are realizing it's more expensive. They're being asked to add more capacity, but it is more expensive. And now they're actually in a position with tight capacity and supply chain needing that to really take that. Now, our view actually from the chip sector, because of that demand right now, they should have reasonably good ability to get somewhat higher pricing and firm margins, at least for the next several quarters. So it should play out pretty well for the industry, at least in the first half.
Ronnie, good morning. Thanks for joining this conversation. So TSMC apparently has hiked prices by as much as 20% on some renegotiated contracts. Do you think that can be the kind of price increase that they could see if this shortage continues into 2022 as well?
Yeah, I'll say their pricing, they're really looking at over the next couple of years. They talked at their last conference firming up price. Now, what that means, because it is costing more and they're planning for good growth the next couple of years, our expectation magnitude, usually the headline number comes in a little bit higher. Our take on mature technology, 10 to 20%, advanced technology more in the range of 5 to 10%. And also for some customers, if they already have orders placed, some of those contracts get honored. So there will be coming in phases moving through next year rather than one step up. But we do see over the next 1 to 2 years, as part of that firming up and ability to invest and maintain their returns, that the price level is going up, but maybe not the high magnitude across the board, 20%.
Sure. What about in-housing chip supplies? You know, a lot of companies are thinking about that as well. How much of that solves the problem, and how realistic is that strategy?
Yeah, I think there's kind of two areas. On mature technology, a number of the traditional chip companies have capacity, and they're making some incremental expansion. But I think the hybrid model continues. In fact, to maintain dual source, really to have that supply assurance, there's still that view to qualify some product to foundry. The reality for advanced capacity in the industry, you really just have TSMC, Samsung, Intel. And so for that, I think the trend really, they will have to rely on foundries. And for that perspective, if they're going to be spending the money to invest, they're requiring that firmed up pricing.